is some sort of caution in terms of management commentary. The stocks are sitting at virtually record high valuations, if not record high prices. So, good time to get Aditya Makharia, the Senior Analyst of Autos at HDFC Securities, for his view on the sector. Sonia was talking about the big moves that we've seen from March lows, and now that there is some caution. Aditya, what do you think? Have people missed the bus, literally?
Okay, so let me give you a slight perspective. While stocks have doubled from the lows and maybe some have gone up even higher than that, if we put this into context, the auto index is yet 20 to 25% lower than the highs which were achieved in January 2018. Okay, so while the market is at the broader market is at an all-time high, the Indian auto index is yet lower. Now, one of the key reasons for the same is that if you look at volumes, and as Sonia alluded to this point, volumes are not back up where they were in 2018. We're still lower. There is still some time for us to catch up to those volume levels which we had seen, 2 years ago. And that is one of the reasons which keeps the stock prices lower. Now, when you come to valuations, you have mentioned a lot of valuations there on the higher end of the curve. But, this is typical of any recovery. You will see that stock prices will trade at one standard deviation above the mean, which is where most of the auto pack is right now. And this happens in the initial recovery phase because the markets obviously factor in growth, which will be 2 quarters to 4 quarters out. And that has rightly been playing out because now you're seeing the green shoots, or in fact, slightly more than green shoots, the recovery has started to take shape. Some stocks have done better because they were more beaten down. If you mentioned the CV pack, it was more beaten down also on the way down, and therefore on the way up, it has caught up to that extent. But I think if we look at it in points of where we are on the recovery cycle, the stock valuations are the way they are even in the last recovery. If you look at 2014 or even if you go back to 2009.
Okay. Aditya, hi, good morning. So from a stock perspective, if you had to give us 2 or 3 of your top stock picks where there is still valuation headroom as well as the demand trends are indicating a positive momentum, which ones would they be?
Sure. So if you look at stocks which have, demand momentum, passenger vehicles definitely comes to light. So therefore, you can look at OEMs such as Maruti Suzuki. They are expecting a good pickup if you look at even the next 1 to 2 years. Also, Sonia, don't forget, a lot of these companies are very creative in terms of the products which they launch out there. So if it be addressing white spaces, that is something, Maruti is very good at. We know in the past they have launched several models and gained back market share or expanded a particular segment. So we see good headroom both for the passenger vehicle segment per se and Maruti within that, also because of its rural mix. Now, a second trend I would like to highlight is that the Indian OEMs have become a lot more progressive, even in terms of technology. So, if, another company we like to this extent is Hero MotoCorp. This company, in terms of products, was lacking a premium segment. After a decade post the split with Honda, they have got the R&D act entirely together. The new CIT center in Jaipur is fabulous, because of which they've launched this entire premium range of bikes, and the initial feedback is fairly positive. So I think from a product perspective, we like Maruti and Hero. From a valuation perspective, most stocks are trading, I told you, at that one standard deviation levels, which is typical of a recovery. So in terms of valuation, there perhaps is not that much headroom.
All right, fair point there, Aditya. Thanks a lot for that view on Maruti as well as Hero MotoCorp. Still some bit of positivity out there is what you see. In fact, on that note, we'll also thank Deepan for stopping by and giving us all his views on individual stocks as well as long-term ideas. What we'll do now is take a short break, come back and give you plenty of technical tips with Sudarshan Sukhani and Miresh Thakkar. Stay tuned.